You're listening to the SBA Loan Experts Podcast, your source for information, tips, and education on the SBA loan program from SBA expert Chris Hearn, founder and CEO of Fountainhead, the nation's leading non-bank SBA lender. Here's your host, Chris Hearn.
Would a beauty supply store, brick and mortar type business qualify for your loans? Some of our service packages does included a business plan that we provide to them. Yeah, we've financed beauty supply stores before. That's not been an issue. I couldn't name them off the top of my head, but I know we've done at least a handful over the years. I'm sure, Bob, you've probably done them as well. So yeah, not a big issue.
You want to make sure that the owner
Yes.
has involvement in the business, that it shouldn't
That's
be
right.
in somebody else to run.
That's right. That's right. So next question, is there capital for newer companies? I'm assuming that means available. I have a healthcare company that's less than 2 years old. Bob, you want to take this one on?
Yeah. One of our attributes is when we look at a company, we have the ability to base the company's ability to service the proposed debt by either looking backwards on historical performance or looking forward based on projected operating performance. Now you got a company with 2 years, so we're probably going to ask for projections. But what's nice is with that 2-year track record, even though it's limited, it should give those projections a little credibility.
Well, in this case, Bob, I think his example was a business has been around for 2 weeks. But I think 2 weeks, but the principle still applies. We have to get a business plan with very detailed assumptions. We're going to want to be very careful looking at the principles, work experience, resume, that sort of thing.
Yeah, I mean, I'm going to go off on a little bit of a tangent here. I mean, we've said a couple of times talking about the business plan, the projections and the assumptions behind those projections. We just don't take those projections and check a box. We actually, I had a conversation a couple of weeks ago with a borrower, and their labor expense for the first year broken out monthly was the same every month, and it totaled up X dollars. So my question was, how did you come up with your labor expense? And they said, oh, the franchisor told me it's 30% of my revenue. It's like, really? I mean, this is your business. Wouldn't you want to know where that number comes from? Like how many people per day, you know, depending upon whether they're a waiter or a cook or depending upon your job position, here's the hourly rate. And so here's what my daily, weekly, monthly, and yearly labor charges are going to be. It seems to me you'd want to have your finger on the pulse. The same is no different than calling an insurance agent and getting a quote for your insurance. So that's what we like to see. When we look at those business plans and projections, where did you just pull the numbers out of the sky, or is there a method to your madness, so to speak, that you have your finger on the pulse and you know what your marketing dollars are going, where they're going to be spent, you know your labor, you know where your revenue is coming from. And that's what's important, to know your business and be able to sell us, to be able to give us confidence that you know how to operate this business.
Yeah, because I mean, you know, we see situations like this all the time. I think that's a great example, Bob. But, you know, if you're a startup franchise, just because the franchisor says that your labor costs are 30% of your revenue, well, there's going to be a ramp time. If you're a startup business, you're not hiring everybody right from day one. It's just not, that's not logical, right? You might hire 1 or 2 key people, and then by month 2, you hire another person, or by month 3, you're hiring more people. So it kind of builds up over time. It might, once it's stabilized, might average 30% labor costs, but that doesn't mean it's going to be like that out of the gate. And I think it's another, you brought up another point I just want to make sure everybody gets. SBA requires business plans for startup businesses or those that are less than 2 years old, or in a case where it's a projection-based deal. But it's not so much about the business plan itself as it's the exercise of going through it and understanding these different metrics that Bob and I are talking about. It's making sure your client understands who their competitors are and have come up with a strategy for how they'll compete and prove their business model in the marketplace. It's things like that that's really the benefit of having someone do a business plan. Now, sure, they can outsource a business plan. There's plenty of those services out there, and we've taken a look at those, and we've financed companies that came with an outsourced business plan. But I think it's really, really valuable for you to encourage your client to go through this process, because I just think it deepens their understanding of the operations of their business that they want to grow. So I think it's really important. All right, let's go to the next question. When will Fountainhead consider construction loans again, mainly those deals that are franchise startups with leasehold improvements? That's a good question. We're looking at a few right now. There's not a complete moratorium on it, but those are challenging transactions when we have all the different macroeconomic things that are happening out there in the world. I hate to disagree with the president the other night. Maybe there's some good stats, but you know what? I do think the economy is retracting. I think the economy is going to be at a much worse place this quarter than it was last quarter, and probably even next quarter, as some of these higher borrowing costs filter through the economy. I think you're going to see more and more small businesses suffer as a result, which makes lenders such as us a little more tougher on transactions, particularly ones that are going to take a while to complete, particularly ones where supplies and materials and labor costs are still inflating, which is what has been the case for the last year or so. And we're not unique in that. Okay, I pay attention to what happens in the commercial lending world. I know a lot of other founders and CEOs of other active lenders, and a lot of us have slowed down dramatically on situations like what you're suggesting, heavy renovations, ground up construction, startups that involve leasehold improvements, FF&E financing, things like that. These are the ones that give some of us pause. Now, I will tell you though, you're going to have a lot better success working with an experienced SBA lender on these projects than you would going to an ordinary conventional bank, who most banks are already tightening up massively as we speak. So it's coming. It's got to be a very strong deal for us to look at it. But, just understand there are circumstances beyond our control that we as a lender have to be concerned about, because, lending financing 101 is make loans that you can get repaid on. And if there's things that can divert that or impact that, we have to take those into consideration and be appropriately cautious. So, but good question. Thank you for that.
And nobody,
go ahead, Bob.
Our reputation, our history, we provided a lot of construction financing, ground up construction. We were known for this. Nobody wants to be back in here with both feet more than we do.
Right.
And so we're paying attention to this.
Yep. We just have to be a little more prudent than maybe 3 or 4 years ago. All right. So next question, how will I receive a notification when you request documents from me in your new portal? Is it safe to assume that I will just receive an email? Bob?
Yes, when we actually create this task and we assign it to you or we assign it to your client, and when we click it, yes, you're going to get that email to tell you to go into your portal to see what's been requested.
Yep, good. I like to throw you some softball ones every once in a while, Bob. All right, next question. Can you do a ground lease on hospitality property for PIP, minimum, maximum loan amount, combination of 7A and 504? So again, earlier we answered this question as it relates to ground leases. Those are a little more challenging transactions. Hopefully you were listening to what I said before. We don't have a problem with hospitality projects. We don't have a problem necessarily with PIP. It's just got to make sense. And in terms of minimum, maximum loan amounts, it's not going to be applicable in this case, but we still are at a 250 minimum at the moment, although I addressed that earlier that we're going to be going down market quite a bit. You wouldn't have a 250 loan for a hospitality project, for instance, but maximum loan on the 7A side is 5 million. On the 504 side, total projects, say 12 to 15 million. We've done over that, but again, of that size, we're going to scrutinize them a lot more, particularly if they involve PIP, particularly if they have a ground lease, particularly if they're hospitality that's non-flagged. That doesn't mean we won't do non-flagged hospitality, but they get a lot more scrutiny than a flagged hospitality project, particularly a flagged hospitality project that's with one of the better flags out there, the Marriotts of the world, the Hiltons of the world, the IHGs, things of that nature. So I think that answered all the question, although I just skipped ahead. So I don't know if I can go back. Was there anything else on that one? If there's any other follow-up to that, just throw it in there and we'll try to get to you. I read some new loans from the SBA to support businesses working with EV conversions. I assume that means electric vehicle / business acquisitions of electric vehicles and charging stations. There is no information yet in the SBA page I haven't seen that. I mean, SBA is regularly pumping out information about different new programs that they may or may not do, or they have the ability to do or not do. I'm not really sure. I haven't seen it. Probably begs the question, that this particular question from you is, is this a commercial business that needs this? Is this an operating company, or are we talking electric vehicles for individuals, in which case those wouldn't be SBA eligible for financing? But again, we've financed plenty of vehicles for commercial businesses, not a problem. We don't have anything special if it's electric vehicles versus a big, semi truck or something like that. So, all right, next question. Joe says, what would be the estimated Fountainhead SBA rate to offer our clients for 7A loans of 2.5 million for working capital and the maximum amortization period? There's more to this question, but let me just answer that. Right now, for a working capital only loan for 2.5 million, assuming it's eligible, good credit, etc., you'd have a 10-year fully amortizing term, and probably it's going to be prime plus 2 to 3, something in that neighborhood, which means you're in the high 9s to high 10% range. And that's because virtually all SBA 7A loans are priced off of the prime rate, and the prime rate obviously has more than doubled in the last year. So if this was back at the beginning of 2021, my answer would be more like in the 6% rate range. So just so you know, and this, frankly, this is what the Fed is doing as a way to try to cool off the economy, cool off inflation, so that we get back down to a level that's much more comfortable for everyone. And unfortunately, part of this is raising borrowing costs for existing businesses or new businesses. The rest of the question, I assume the client would have to pay the minimum 10% down payment. Yes, in many cases, but not always, as Bob pointed out earlier. Can the initial SBA loan amount be increased, or would the client have to reapply for the increase in the 7A loan? Well, so we've done a number of, obviously, we've had clients for years that come back to us for another SBA loan. Keep in mind, though, you've only got 5 million of eligible SBA dollars per principal. Okay, so you could use that up, and if you used it up and haven't paid off those loans, no more SBA eligible financing is available to you. But can you increase the loan? What we typically would do is we would just make a new loan. We like to wait. I think the agency likes us to wait, 6 months between loans or something like that?
Yeah, but if circumstances are such that it warrants it, that we have borrowers 2, 3, we even have 1 or 2 with 4 loans with us.
That's right. And this may be our final question from Nick. Is there a minimum maximum loan amount on deals with no real estate collateral? I mean, we do a lot of transactions that have no real estate collateral, Nick. So maximum 5 million. We've done plenty of $5 million deals on the SBA 7A side that have no real estate collateral. Minimum, as I said earlier, traditionally it's been 250 for us.
From the competition with business acquisitions, e-commerce industry, service industry that lacks real estate, and the traditional lenders hit their head on the wall because they have LTV requirements, and we don't. It is SBA, so if there is collateral, we're going to take what's there. But if they lack it, we have good experience, good credit, good cash flow, we're still able to move forward where others get the heartburn.
Yep. And just so you know, and I'll end it on this, there's a lot of lenders out there that will turn down an SBA deal and claim it's because they don't have adequate collateral coverage. That is not what they're supposed to be doing. That is not something that we do. So that was a good question from Nick, because I've heard it for decades about people, lenders saying, no, we don't have enough collateral to do this transaction. No, that's the point of why the lenders get the government guarantee. It's to help offset that. And there's just no regulation that says that a lender has to be fully collateralized on an SBA loan. We have to take all available collateral. That is true, but we've done plenty of transactions where our LTV exceeds 100%, frankly. I'll give you a quick example: business acquisition transactions with temporary staffing firms. Temporary staffing firms don't have a lot of assets. I've had situations where they've come to us over the years because their own bank turned them down because they don't have assets to do the business acquisition financing, even though it was a 7A, but it cash flows well. You had experienced operators. It made sense as a transaction. Big airball, right? Collateral light transaction doesn't bother us. I'd much rather have a stronger financial performing company than a bunch of collateral for me to fall back on, God forbid, if we have to liquidate the loan. Okay, so to wrap up, we've covered some of the other things I wanted to talk about. Bob, I'll give you the last word if you'd like.
Yeah, this portal is going to make your life a lot easier throughout the process, origination, underwriting, and closing with Fountainhead. So if you're not an approved broker, get signed up.
Right.
If you're an approved broker, you can't find your link, just reach out to us. We're more than happy to set it out to you.
Yep. All right. Thanks for spending a little bit of time with us, gang. And we look forward to working on your deals as soon as possible. We look forward to hearing feedback from you about the process being much more efficient and faster, as we always want to go faster and help you out so you can go do what you do best, which is to go find another deal for us to finance.
Hey everyone, thanks for listening to today's episode. Be sure to subscribe to our podcast to be notified weekly of new episodes, and head over to fountainheadcc.com for more about our SBA 7A and SBA 504 resources. Also, give us a follow. You can find us by searching Fountainhead on any of your favorite social media channels. Thanks again, and we'll see you next week.
Today's episode is brought to you by Fountainhead, the nation's leading non-bank SBA lender. Fountainhead's team of SBA experts will guide you through every step of the process and get your loan closed faster and more efficient than any bank. Apply today online at fountainheadcc.com. Thanks for listening, and we'll see you next time on the SBA Loan Experts Podcast.